Hello everyone, welcome back to another real estate market update. I'm Uros Markovic and I'll be your host today. This time, this update is going to be quite unique. But before we start, please gently press that subscribe button below so you don't miss any of these great videos. In this report, I will discuss the key items you need to know about the market data just released for February 2021. And at the end, I'll give you a few bits of advice if you're in a market to buy or sell. Well, 1 month ago, I presented you a bunch of articles that seems to be painting the contrasting pictures of our real estate market. Well, it's funny how much it can change in only 1 month. The headlines now are all positive, such as these top 2 stories from the other day. So the only questions people seems to be having right now is about how long this momentum will be sustained. With oil prices rising and COVID restrictions easing, there is optimism and hope in the air. And with that comes the consumer confidence to make life happen and to make housing moves. So let's take a look at the key facts from the last month. Fact number 1. As good as January was with a 40% increase over 2020 sales figures, February beats it with 58% increase in sales. You can see by the graph we were neck and neck with 2014 and beat every other year in the last 15 years with the exception of a blockbuster results in 2007. Here is another representation of how the month went in relation to the last year. This is not the pace we are accustomed to have. Last month I said that the last week of January we were feeling more like an April or even August, but definitely not as a January. As we finish off February, we are selling a daily average of 74 homes a day. That is up from 54 homes we had in just last week of January. That is a 38% increase in the pace of sale in only 1 month. One additional thing to note. February was stronger sales month than our best month in 2020, which was July, if you remember, when all the pent-up demand came back to the market as a reopening started to happen. And this graph shows the progression from the start of the year. Sales are up across all property types as well. And here is the quick summary. Detached is leading the way with 69% increase over the last year. Row homes has 61% growth. Semi-detached experienced 31% growth, and apartment segment is up 35% over the same time last year. So all across the board, we had the winner of the month in terms of sale. Alright, so here is the fact number 2, and let's talk inventory. Last month I mentioned that throughout the month we saw the gap between active listings on the market in 2021 continue to grow versus 2020, which meant that despite the increase of sales, there was not as much of a rise in new listings. This was a little bit more tempered or possibly just delayed. And I think that the key term is delayed. Here is the graph showing the active inventory in 2021 versus last year. This month we had flatlined. We started and finished the month with the same gap in inventory, which is about 21% less than 2020. This is about 1,200 homes. Now, that is saying something because I just mentioned we had 60% improvement in sales. So you would think that would cause inventory to decline. But it didn't happen because of the second half of fact number 2. Our new listing inventory started to come back online, which didn't seem to happen in a big way in January. Last month we listed 2,848 properties, which was an increase of 16% from the same period last year. And we currently have 4,519 properties on the market. Looking at this relative to the last 15 years, you will see that we are inching further and further down the low inventory track. This is the 4th lowest inventory February seen in the last 15 years. Again, 4 market types are acting a little different, and here are the quick specifics. Detached has 30% less inventory than at the same time last year. Row homes have 7% less inventory, semi-detached have 40% less, and apartments remain 2% lower. And here is the fact number 3. Prices. Last month I commented that we had a perfect supply and demand dynamic to to be comfortable in a predicting price increase in our market. And that is what is starting to happen. In our market as a whole, we are seeing increase of 4% year over year. The detached market is leading the way with a 5% improvement, 4% in semis, 1% in both row houses and apartment markets. They are all positives early in a year, which is a good sign for a recovering Calgary real estate market. In the following graph, you can see where things start turning around. We bottomed out in July 2020, and then it has been an upward climb ever since. Here is another graph that shows how pricing changes are different across various property types. Here you see almost all positives across the board. I can remember so many times in the last 5-6 years when these graphs was completely opposite. All negatives and just a handful of positives. So this is a welcome series of events for Calgarians. Okay, these were 3 major facts about the sales, inventory and pricing. Now, let me provide a source section of advice with some more insider information about these numbers. If you have followed this far, it's fair to say that the market is rocking and rolling and in a far better shape than we experienced for quite some time. But I wanted to also temper the excitement just for a little bit with some extra bits of reality that are not being talked about enough. There is a buzz in the air and the word hot is being thrown around. Although I agree with the buzz, but I also want to keep things in a perspective. So a couple of things. Sales to new listing ratio is currently sitting at 65%. But this means that 35% of new properties hitting the market are not being scooped up. Now, that is a great number. Yes, it is way better than 47% in 2020, but it certainly doesn't mean that everything hitting the market is being sold. Sales to list price ratio is currently at 98%, up from 96.7% in 2020. But despite the attention this number is getting, it is not like list price and beyond situation what we are seeing in some parts of BC and the most of Ontario. Again, this is a great market, but it isn't pick your price and get it territory. Days on the market are currently sitting in an average of 45 days, which is improved from the last year 57, but still that is a month and a half on average throughout the city. This is far better than what we have seen for a while, but we still need to remain very mindful of our pricing and listing decisions. And now what I believe is the true indicator of the market pace: months of supply. Here is the graph showing the data from February. As you can see, the months of supply have continued to drop, which means that the pace continued to get faster. The Calgary Real Estate Board data show 2.46 months of supply at the end of the month. 2 months of supply is great and a healthy market. And that stat, coupled with days of the market data, sales to list price ratio data, and the sales to new listing ratio information, paints the full market picture I want you to be aware of. So, is the stuff selling? Oh yeah, but not everything. These are not pick your price days, and you may even need to be a bit patient. So it will be my advice to price very close to the market value, price fair, and maybe even a little bit incentivized, and the market will respond. If, on the other hand, you're priced over the market, you will be missed. Trust me, I see sellers in this situation every day scratching their heads and hoping the market will catch them. It would in other markets across the country, just not here in a Calgary and a region. Now, let me comment on months of supply per property type. Detached is the hottest market segment with only 1.4 months of supply. Row homes are 2.6, semis 1.6, and apartments are 4.5. So, I will say again like a broken record, be sure to understand what market are you buying or selling in. It continues to differ greatly. Well, this is it for today. Thank you so much for watching, and please don't forget to subscribe to my channel. See you soon.